Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar mirrored the gold price overnight and advanced through the 72-cent handle, and so far has inked in a high of 72.29 after the New York close. Now, from a technical aspect, you can see here that the trend is still maintaining as a resistance, once support, now resistance, and is currently confined to a top side range of 72.25 to around 72.60. Although the MACD has not put in place a potential bull case, that the RSI is slowly trying to pull in the bulls to take the market higher, which could end up being a bull trap. And therefore, from the region of around 25.60 on 72, could see a turnaround rather sharply. Until we get the confirmation from the break of this trend, that is a close under 71.40, then no doubt we'll continue to see a lot of noise in this range. But overall, I believe the market is destined to head lower and eventually fall above the 72-cent handle. With the US dollar index, which measures the greenback strength against a basket of 6 major currency, has dropped back to the recent lows, that is, of around 92.40.50 area, has pushed the euro back up towards a high 118. Now, from previously, you can see here that the market has found a supply zone above or around 119. And no doubt, I do anticipate another round of supply after this 5-day trek should eventually revert back to the downside. What is interesting is that since the rejection of 116.95 is the MACD has failed to support the upward movement and therefore could eventually see this downturn, which I anticipate. The dollar yen, well, the call from the rejection of from the target, first of all, 107, is now back to the downside after taking out the 105.85 overnight. It looks towards the region of the low region of 105.30.40. I review from this point because, or should I say more to the point, is that the level is likely to become quite heavily contested. So reassessing from there could actually see the market lower. So at present, the support is seen at 105.30 and then 104.70 to 104, where we saw this bullish outside range day. Nevertheless, from the technical pattern, the RSI is very much convincing to support my view down towards this bottom side of the range. And if the MACD does cut, then yes, I would say that we are heading back towards the lower side around 104. Now we look at the sterling. Well, the market is still trading sideways in terms of this broader pattern. Nevertheless, the rejection of 130.30 has taken us back towards the top side of the range, seen around 130, 140, 45. I do anticipate the lack of momentum from the MACD should give further confliction to the downside. Eventually see this break supported by the TriStar Doji at 130.30. But until then, let's see how the market plays out in the next 12 to 24 hours. This pattern caught me for sterling yen. I believe the market is breaking down because of the dollar yen selling off, that is in yen strength, should see further pressure on this trend line at 138.50. Now we get a break at this level. This will give further indication down towards 137.80 to about 137.20 as a measured move. With any advances, find resistance around 139.10 to about 139.35. But from a technical aspect, we've nearly got the marriage between the RSI and the MACD to support the bear case. Once we've broken this hurdle at 138.50, it should put in line in terms of the decline. We got a break above the 1,968.72 level in gold overnight. Now the call from that was back towards 2,000, which we're nearly claimed now after seeing a peak at 95 this morning. Now the market is still destined to test higher and still trying to claim back after this heavy descent that we saw previously of around $120. But from the $60 rally from overnight, let's put this focus back into the top side. I am a little bit cautious because 2,000 is about as best I will give it because I'm a little bit unsatisfied to the way the technicals are set up to support a bullish case. Nevertheless, the market has found a bit of momentum after the drive from this bullish candle from last night. Let's see what happens above 2,000. If so, the market could actually push up towards the recent highs seen around 2064 from this bearish outside range day. But for now, there is still about $7 left on the upside. Reassess. Wrapping up with oil. Well, the market at this stage is still a little bit lackluster, and as in we're not seeing any movement. Nevertheless, the market is still hanging and clinging to the top side of this range, which could come into around $46 as fresh highs, with a pullback seen around $39 as a base. Well, that wraps it for today. Thank you very much for joining me. As always, subscribe for the intraday report. Hope you enjoyed a great start to this day.